Hey everyone, welcome into the Monday market update. I got Rob on with me again. Sean's traveling today, but we got a great day for you and a kind of a weird week. 4th of July is tomorrow. Happy Independence Day. Hopefully everyone can enjoy, but the market's still open today, kind of, right? Like, Rob, we have an early close, 2 p.m. Eastern. Is anyone actually trading right now?
There's like 9 guys trading, I would say. That's it. There's a couple guys putting some stuff across and putting some bids out, but it is I'm looking at the charts here and it's pretty quiet.
I agree. And I mean, we have a little bit of data that came in this morning, ISM. Kind of the factory, PMI readings that haven't been really the source of drama by any means. And they didn't produce any drama today other than, hey, things are looking good. But that's just kind of thinking about, the Fed needs to have that as a low number. It's not the number they're worried about. What number they're worried about, along with CPI, is jobs number that comes in Friday. That'll be some drama that we have. And, we talked about this before we hopped on Wednesday. We got ADP, which is the other job number that's kind of like the preview. But we also have Fed minutes from the last meeting. Definitely something for the market to digest once everyone gets back from the Hamptons or wherever in the world they are.
Yeah, we're obviously it's just going to be quiet trading, right? That's just what it's going to be. There's potentially some moves can happen that are like there's no real substance behind it. So we'll see what happens when the data comes out. Wednesday's Fed minutes getting released. Yeah, big deal. ADP is a big deal. Friday will be a big deal. Kind of everything is a big deal because there's just not a ton of activity. So when things start to maneuver a certain way, it's really hard to get the opposite reaction coming in just because of the limited amount of traders that are out there right now. But there's a couple things I definitely want to kind of pay attention to, and it's interesting just based on the information and data that has come out. Like this 2 and 10 year spread, like it's widened again, which is I think it's over 100 basis points, might be 100. I'm looking at it here. It's around 107 basis points, which is significant. That's a significant spread between the two, and probably the widest I've seen in quite some time. Those are deemed recessionary signals, like we've been talking about for probably 6 months or 8 months. But the data that we got last week shows that that's probably not going to occur in the near term. So it's a lot of weird anomalies in the market right now that kind of don't make a ton of sense. The short-term piece obviously is taking into account that the Fed is going to be potentially increasing rates again, and that's being shown here in the 2-year. But it's just one of those items that it's the signals are pointing to a slowdown, but the data is not showing that.
No question. And it's a matter of a little bit of technicals, fundamentals. How does the 10-year come back up to where the 2-year's at? Does the 2-year come back down? I don't feel like there's much momentum to push the 2-year down with, all the signals of rate hikes. And, if people even want to predict more than the 2, we kind of already have baked in, with all things the Fed has been saying. So it's going to be an interesting little ride. And, we've always been talking about this range bound world we've been living in, the past month or so, or even longer, really. And, do we break out of that 3.8 10-year kind of level that we've been sitting at? 3.82, I think, is the level we've been quoting at as the top of the range. How well does it kind of establish its, level right here? And does it go up from there? I think these are all things that will be interesting to see kind of develop, because you're right, that is a spread. And outside of the headline of the market's closing early today, that was the other main headline I saw in the financial news I was watching this morning. There's literally those two things. So they did a good job covering. We're basically financial news.
That's it. We're done. But I will say on the MBS side, we are seeing a little bit of green, on the screens today, just after this recent print here. And I'm seeing the 10-year drop down below that 382 mark. It's at like 385, 386 this morning. So this is nice to see that 378, 379 range on the 10-year. Hopefully it sticks and we stay green. Again, a lot of things can maneuver and see how the day pans out. But being an early trading day, we don't expect to see a ton of volume. I would expect that those that are locking today and the lenders that are putting out rate sheets, there's probably going to be a little bit of, I hate to call it like fluff margin in there, but there's going to be a little bit of stuff baked in just because it's not a a significant trading day today. So that usually means that they're going to put a little bit extra margin in the sheets just for a day that's going to be just like going into a longer weekend, because this is a kind of an extended weekend with a short day today and then obviously the holiday tomorrow. But we are seeing, like I said, a little bit of green, which is positive. We'll take any green. We'll take any green we can. We've been beaten down enough. We'll take some green here. And one of the things I am seeing also is the price differential between coupons. This is important things to pay attention to. We're starting to see with the recent kind of pricing, call it pricing woes, or some of the red days that we've had. We haven't seen like the next stack get opened up. So what we're dealing with and what we're seeing is it's like rates didn't go higher, like pricing just got a little worse. And we've talked about that before. Like we're at the top end of the range in terms of what coupons are out there and production coupons are out there in trading. So I don't anticipate new coupons opening up and getting released. So you're probably just going to see a little bit of pricing deterioration, from where you were last Thursday and Wednesday, versus it being like I have to go a little bit higher in interest rate. There isn't that next coupon just isn't there trading with enough liquidity to provide a price. But in the range that the coupons that are trading, we're starting to see a little bit of structure in the gaps between those coupons, which is nice. What does that mean? It means that when you drop that 0.5%, it's starting to get like consistent in the differential in prices between those coupons. So when there's consistency there, that's a good thing. And then hopefully when rates come down, that like structure stays that way. So our pricing will just continue to get better and not be all wonky in between the coupons, which we've seen over the last year.
No question. I completely agree with that. And yeah, what if they do open that up? Let's say rates continue to put upward pressure. It's probably not going to be that much incremental gain premium that we're going to see, right? So it's all about, actually having some very solid footing and the coupons we are originating today. And, hopefully we can continue that and, that premium stays there and kind of does give back to us. So, we can offer, at least somewhat, competitive, everyone's playing the same ball game. We're very competitive, but it's just a matter of being able to have a little bit more options for your borrowers who you're serving, right? So it's just a little bit of a, different, dynamic that we've always been really originating in the past year or so, but just hopefully we can continue to get some fair pricing.
I'm going to call out Jimmy here because he's calling. You can't see it with my screen, but he's calling and not watching the market update on Monday. He has no idea that I'm live. I'm live and I can't answer his call. So Jimmy, I apologize for not answering, but I'm live with Austin here. So good point on that piece, and opening up the rate stacks always, like we talked about a lot. Another thing is basis point. I wanted to touch on this, Austin. This is a small little thing, but I definitely want to talk through it. What is a basis point? I know it sounds weird, but I want to explain to everybody that's watching, at least, so we know an originator standpoint. So I get a lot of emails and I get a lot of texts and messages in workplace, and I know what they mean, but they don't know what the basis point means. And a basis point is really simple because in the trading world, you have basis points, which is a percent of a percent. That's all a way to think about it. So if there's 100 basis points, it equals 1% of the loan amount. So when you're talking in terms of basis points, that's what a basis point is. I get a lot of hey, I want, can I get a price exception of 0.24 basis points? It's like, well, that's not 0.24%, not, that's 24 basis points. So a basis point is just, the way to think of it is just a percent of a percent. So again, 100 basis points is 1%, 200 basis points is 2%. That's the math there. And then in the trading world, we live on 30 seconds, which is different. So when you're looking at some screens or looking at some of the live screens that we have, a lot of times they might convert it to basis points. But if you see it where it looks like it's 100.16, a lot of times that means it's 16/30 seconds in trading. So a tick means 1/32, and a BIP means 1% of 1%. I want to clarify that because I get so many messages on that stuff that is incorrect. So I want to put that out there for the group.
That's a great clarification to have, because 100% MBS prices, you won't really see this as much when you're looking at the treasury screen, but if you're looking at MBS, ticks is the way Wall Street and any secondary desk looks at things when they're moving in and out positions. Ticks. BIPs are different. That's a great thing to cover, really, and I think we should probably review that incrementally, because that's 100%. I would say most of those out there probably don't think about ticks. In BIPs is something that can be like an industry word, right? right? And people don't understand actually what it is. I think it's a great piece of knowledge to always carry over.
And I always put in there, say like also known as when I put it out there, and then also putting into the dollar figure as well. We always want to clarify what it is if someone puts it in incorrectly. And Sean's calling me now too. So both of you guys, Jimmy and Sean, you're not watching the market update, which you guys should be watching. So, you know, that part of it as well is you always want to clarify that and always go into, you know, with our team members, we talked about this, Austin, make sure we come back and are very clear and concise in our messaging, you know, with our capital markets team and saying, hey, when we're replying back, make sure everyone understands that is, you know, if we put it in basis points or put it in a percent amount or put it into the price, we also put the dollar figure that it might be associated with that particular case. So that way there's no confusion on the terminology and the, you know, the language that's used here.
No question. No question. All right. I think it's just great things to cover. I think we can close the market update early, just like the market is. Anything else you wanted to close, you know, touch on before we close out?
No, just those two items. And again, today it's going to be a little bit choppy as usual. We're used to it. So I'm seeing it like a little bit green. Now we're back to 380 on the 10-year. So the markets are moving a little bit. So just understand today's just going to be choppy and use your discretion. If you like it, lock it. Don't wait around. There's going to be a lot of movement for the remainder of the week. And then it's always easier to make changes than it is to go back in time and lock. No time machines here. We talk about it all the time. So that's all we got here today.
Awesome. Thanks again for filling in, Rob. It's great having you on as always. And have a great 4th of July, everyone. And we'll see you next week.
All right. Thanks, Austin. Thanks, guys.
See ya.